Hello, everyone, and thank you for joining us for the 2019 Year-End Accounting Checklist as part of the LTRC Industry Insight Series. Our speakers today are Deborah Cushman and Erica Bursler. Deborah Cushman received her BA in Geology from Wellesley College before earning her JD from Lewis and Clark Law School. She is knowledgeable about bank and trust account bookkeeping and understands all aspects of law firm administration, including billing, accounting, receivable and payable, payroll, reconciliations, adjustments, and business tax reporting. Deborah opened Premier Legal Billing and Bookkeeping, LLC, out of the desire to help other small and medium-sized firms manage their firm operations in a cost-effective manner. Erica Bursler is the Director of Strategic Communications at CosmoLex, developers of the only fully integrated legal practice management, billing, and trust accounting system specifically designed for small and solo law firms. Erica's degree is in business administration, and she has nearly a decade of experience in the legal software industry, catering to the needs of small and mid-sized firms. Thank you all for joining us. We'll now begin the webinar.
Great, thank you so much. Welcome everyone. As mentioned, my name is Erica, and Deborah and I today will be talking about year-end accounting checklist. So overall, I mean, we're in the last quarter of the year, actually the last couple of months of the year, and likely closing your books, wrapping up the year from an accounting perspective is something that is really on the top of every business owner's mind. You may or may not have experience with accounting. You may or may not be doing the accounting activities yourself, but I do think it's important to understand what all has to be done so you can either plan your time accordingly if you're the one who does the end of year tasks, or work well with your bookkeeper or your accountant to know what's expected, what's being done, how is that being timed out, and also maybe to get a step ahead for the upcoming year, 2020. So today's presentation, Deb and I will both be kind of sharing the time, reviewing first law firm accounting, just in general. What is legal accounting? Like I said, some of you may have experience in accounting yourself. Some of you, it may be a brand new topic for you. So we'll build a little bit of a foundation. And then we're going to go into the year-end legal accounting checklist. Now these are a list of all the different things that need to be completed at the end of the year. Deb will be here to really go into a little bit more detail. We are keeping it, top level. There is a full a detailed checklist that you will be receiving at the very end. We'll let you know the link to access that. We also have that in the handout section, so I'll point that out towards the end as a reminder. You will have that full checklist to use, especially to review for yourself or to provide to your bookkeeper to give as guidance to them as well. And then at the end, we'll round up with some tips. How can technology help you get ahead in 2020? At the end of the year, you may realize, you know what? We made this a lot harder on ourselves. Things could have been done a little bit better to make that end of year process a lot more easier or a lot less cumbersome. And very often that just comes down to how you start off a year and how you follow through in the upcoming 12 months. So with that, I'll start off with just the basic law firm accounting and what that is. I think when we talk about accounting, very often the first thing we think of is, filing our taxes and generating the necessary reports and tracking all of my expenses that I pay as a business. Sure, that is one part of it, and that's one part that every business, not just law firm, but really every business needs to stay on top of throughout the year. But there are other pieces that are very much legal specific and also compliance related that you want to make sure you're handling the best way possible. One of which is how you handle costs that need to be reimbursed by your client. How do you handle income when those invoices get paid? That income could be many different things. It can be fee, it can be reimbursed costs, it can be finance charges. How does that get accounted for on the general ledger, for instance, the different accounts that are listed there? And then the last point here, which is fee advances and retainers, usually centers around trust accounting. So of course that is unique to law firms. It does come with a lot of regulation, a lot of requirements, because it's not your money. You're handling basically taking care of money for somebody else until it's either earned by you or dispersed to third parties. So there's different rules and regulations involved with that. So the checklist, as we go through it today, it touches upon each of these areas. You will notice certain items that every business needs to worry about, and you'll notice some that are more centered around compliance, whether it's trust accounting, handling your costs, reviewing your client ledgers, different steps like that. So I'm going to go ahead and pass it on over to Deb, who has a lot of experience with doing bookkeeping for law firms, so she can give a little bit of insight into these steps as well. Deb?
Good morning. Well, it's morning where I am. So the easiest way to make sure that you don't miss any of the data that needs to go into your system so that you have everything that you need both for trust accounting and for the business side of your law firm is to have a checklist that you have in front of you and you use to make sure that you've caught all the things that need to be entered into your system before the end of the year, so that when you do run the reports that your accountant has asked for, you know all the data is there and it's accurate. Because the last thing you want to do is to give your accountant inaccurate information. So we've prepared a year-end checklist. These are the tasks that you should be doing at the end of the year. And it doesn't really matter when your fiscal year ends. For most law firms, that's in December. But for other law firms, they operate on a different fiscal year and they may end in June or July or a different month, but it doesn't matter. These are the things you should be doing when you are coming up on the end of your fiscal year. So you want to make sure that you have run your final billing for the fiscal year. So you want to make sure you have all your time entries made, all your cost entries made, you've recorded all payments that you've received during the final billing cycle, and that all of that is there, and that the payments have been applied to the proper invoices so that the balance due showing for any particular client is accurate for that point in time for the end of the year. So you want to run your final invoices. You run them through the last date of your fiscal year, and then again, you can apply any payments that are going to be made if they're going to be made from trust on the day you issue the invoices, and if not, then you don't run the payments. But you do want to run the invoices and make sure you've included all time and expenses and everything through the end of the year. You want to also make sure that you have paid your remaining accounts payable bills. So if you have anything that is due, any payments to vendors that are due, make sure that you have paid them. And consult with your accountant about this, because I know that some firms try to record payments to vendors in the following year, or they want to take all of them in this year, and that's based on the advice of the accountant. So my advice is always go talk to the accountant to see what they want you to do or not do regarding your bills at the end of the year, but then make sure that you've paid them and that you've taken care of them. So then you want to reconcile all of your bank accounts. So you want to make sure you reconcile all business accounts, all credit card accounts, all trust accounts, make sure everything has been entered. So hopefully you've been reconciling throughout the year. That makes the year end a lot easier if you've been reconciling throughout the year at the end of every month. But if you haven't, you're going to have to go back through and reconcile every month that has not been done yet. So you want to make sure that you clear your transactions carefully. So sometimes there are duplicate entries, sometimes you've missed something because you charged a credit card and you forgot to put that into your accounting software. So you need to make sure that you catch all of those transactions. And the way to do that is to compare what's entered into your books to what your bank statements show very, 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 very carefully, and go down and make sure you haven't missed anything. So, you know, and when you're dealing with your trust account, this is especially important because you, the attorney, are responsible for making sure that the trust accounts are accurate, and you want to make sure that you have all deposits and all withdrawals from trust entered and accurately entered. So check for wires and bank fees, any bank fees or interest that's charged by the bank. When you're dealing with your IOLTA, that may mean making sure that the deposits by the bank and the withdrawals by the legal foundation are entered, as well as all of the other transactions. And then you also want to make sure that you reconcile your credit card accounts, again, to make sure that you've captured all of your expenses, all of your hard costs, that everything is there. So reconciliation is a means for making sure that you have not missed any business expenses or any business expenses or any trust account transactions that have taken place during that year, and that everything is accurate. You want to make sure that if an expense was tied to a matter, that it was properly tied to the correct matter, and that it appeared on the bill if it was supposed to be billed. And so you need to make sure that that has been done. And then when you're talking about adjustments, this is very, very, very tricky. Adjustments are very technical accounting. They're things that accountants do to make sure that the books are accurate, because sometimes things don't get entered properly or they need to be adjusted. You really should not be making an adjustment unless instructed to by your accountant, because your accountant should be telling you which accounts are going to be affected and how to make the entry. So be very careful. There are some adjustments that the software, your accounting software, may make behind the scenes for you automatically, such as rolling over retained earnings into legal fee income at the end of the year into retained earnings. But you need to be aware you really shouldn't be doing adjustments, which are also known as journal entries, on your own without accounting advice. And make sure that your adjustments are posted to your expense account, to the proper accounts as instructed by your accountant. So moving on, when you're talking about your trust account, the first thing you want to do is to confirm your client retainer balances. The way you do that is by reconciling your trust account, hopefully every month. You've been reconciling it, so it won't be too hard at the end of the year, but you do want to confirm that those retainer balances are correct. So you want to go through all of your client trust activities and make sure that those that all deposits were entered on the proper matter, that all withdrawals, whether they were checks or EFTs or wires, were all recorded on the proper matter in the proper amount. And then you want to run a three-way reconciliation report at the end of every month, and then at the end of the year, so that you can show what your that all of the balances are proper for each client, and that you have recorded all your deposits and all your withdrawals, and that everything ties back into what the bank says your bank balance should be. You also want to then print and archive all of your reports, because you want to know what it looked like at the end of the year. If your accountant winds up going in and making any changes and you think maybe they made an error, you won't know that if you haven't printed your reports. So print them and archive them so that you have them. That way too, if the internet is ever down and you can't access your system and you need to see the report, you've got it at your fingertips. So be aware of that and print those reports. That's really important. All right, so once you've made sure that all of your data has been entered correctly, all your expenses, all your trust accounts, all your payments received from your clients, that everything has been entered, all your bills, at that point in time, you will be ready to then run your financial reports that are what the accountant typically asks for at the end of the year. So, but before you give those to the accountant, this is yet another place for you to stop and look and review the data to make sure that everything looks the way you think it should look, to see if maybe you missed something. Again, the name of the game here is you want to make sure you haven't missed any transactions, both on the business side and on the trust accounting side. And all of these are places at which you can stop and look and make sure you haven't missed anything. So on your balance, so there are 3 reports that your accountant will typically ask for. One is your balance sheet and one is your profit and loss. And then your accountant may or may not ask for your accounts receivable or collection report, but this is a report that you should be looking at the end of the year to check the status of your and financial health of your firm. So on your balance sheet, what you want to look for is to make sure that the balances look the way you expected them to look, that the income looks right, that the expense, well, on your balance sheet won't be expenses, but that on your equity looks correct, that your liability accounts look correct, that you've reported all your assets. Did you take out a new loan? And if so, does that appear on your balance sheet? Did you buy any new equipment? And does that appear on your balance sheet? Did you have any accrued depreciation that your accountant wanted you to put on your balance sheet? Do you have the advanced client costs appearing on the balance sheet the way you expected them to appear? Do you have any owner contributions to equity? So did any of the members, the firm partners, contribute money to the firm over the year? And is that reflected on the balance sheet? And do you have any draws that were taken by the members of the firm and the partners of the firm? Do you have those draws recorded properly? Because you want to make sure that those were recorded and everything appears. So again, it's just a place to just check and make sure you've caught everything that might have gone on financially for the firm during the year. You also want to review your profit and loss for the end of the year. So you want to make sure that your income looks correct, that you've captured all payments from clients, and that they've been allocated properly. You want to make sure that if you're recording your reimbursable client costs, your hard costs on your profit and loss rather than as an asset, that you have recorded those and that you've captured all of those and that they appear. You want to make sure that you've captured all your expenses and make sure they look correct. If something looks low, go make sure that you didn't miss some transaction somewhere that you paid out that didn't make its way into your books. And then finally, you want to review your accounts receivable and your collections. Again, this is an opportunity to look at your AR to see who's behind, who's not behind, who's paid, who's got money in trust that might be usable for your accounts receivable and to be able to pay it, and who maybe you want to send to collections. It's again a way of looking at your health of your firm, as well as making sure that you have all the data you need to provide to your accountant. And if you're on an accrual basis, the accounts receivable will matter and will appear on your balance sheet. So you want to make sure that this is all okay and properly entered. You also want to make sure that you've captured all of this information, all of your AR and all of your payments, because if your clients have been paying you by check, they will most likely send you a 1099 at the end of the year. So you want to make sure that you've captured all of the payments that you've received so that you make sure that it matches whatever 1099 your clients are going to be providing to you and to the IRS. Moving on, so you will also need to file 1099s. If you are an LLC and you are filing your taxes, one of the things that they ask you to do is to certify that you have filed your 1099s. So for the vendors. So bear in mind that you have to provide a 1099 to all vendors who you paid by check, by wire, or by electronic means but not by debit or credit card. So if you've paid a vendor by debit or credit card, or if the vendor is a corporation, you do not need to file a 1099 for them. If you're in doubt about whether or not you need to file a 1099 for a specific vendor, you should talk to your accountant to see whether or not you need to file a 1099 for the vendor. But if you do, you will need to run a report that calculates how much you paid to the vendor by check or by wire, okay? And if it's more than $600, then you will need to provide them with a 1099. That means you're going to have to obtain their employer identification number or their social security number. You typically do that by sending them a W-9 and asking them to fill it out and return it to you. Once you have that W-9, you can then prepare your 1099s, which then get sent to the client, and then, to the vendor, excuse me, and then you prepare a Form 1096, which is where you send off to the IRS and tell them, here are all the 1099s I prepared and sent out this year. So that's the last step you need to take at the end of the year. And once you've done that and you've recorded everything and you've ensured that everything is where it's supposed to be and you've reconciled, you are done for the end of the year and you can close out your books. And then you don't really want to make any changes to those books unless instructed to by your accountant. Because once they're closed, that means that you've provided them to your accountant, and the accountant will most likely use them to prepare your taxes, and you don't want to make changes to those books once that's happened.
Okay. I think that is the kind of the rounding out of our checklist. I do want to remind everyone, we're going to now head into some tips for going forward to help make this process easier, either for the end of this year or the end of next year. I do want to remind you that you did not have to frantically write down notes. We do have a full detailed checklist in the handouts area, which is in the GoToWebinar panel right now. So feel free to download it from there. We will also provide a link at the end of the presentation in case you just want to go on the website and download it from there as well. So thank you so much, Deb. She has a lot of experience working with law firms and closing out their end of year.
I had one thing I want to mention really quickly.
Sure.
When you're talking about your trial balance report and moving your net income on your balance sheet, some programs will do that automatically for you and some of them won't. Sometimes your accountant will do it for you, but if your accountant doesn't and your program doesn't do it automatically, you will need to do that, and you may need to ask your accountant for instructions on how to do that. So, or your bookkeeper. So
Sure.
I just wanted to point that out.
Yeah, and another great point to bring up is for some of you, like I said in the beginning, some of you may have experience with accounting, some of you may not. Some of these terms might be new to you. Things like trial balance, profit and loss, balance sheet. Those are the basics of accounting, of course. So if you're planning on doing these tasks yourself, you definitely need to understand this terminology better, understand these different steps and functions and tasks a little bit better. But also, even if you're not, you need to be able to say to your, let's say your bookkeeper does all of your entries. Well, you need to be able to see, I need to look at the profit and loss in the balance sheet for the year and be able to verify that everything's being done correctly. Because I think that accounting is one of probably the most popular outsourced activities because we're not accountants. Most people are not, don't have accounting as a hobby. It's something that either you choose as a profession or you don't. So if you're outsourcing, that's perfectly fine, but you need to also be able to oversee. So I think it's important to be mindful of this checklist, know what needs to be done. I think one point that Deb brought up, which is really important, things like reconciliation. She's saying, well, hopefully you've been reconciling every single month. A good way to ensure that is instead of at the end of the year going to your accountant and say, or your bookkeeper asking, okay, have you reconciled for the whole month? Each and every month, there could be another collection of reports that you say, okay, I need the reconciliation for each and every one of my bank accounts at the start, maybe the first of every month. That's one way to know that that is being done regularly, and then you can verify, because something like reconciling or a lot of these review steps, they're a lot more difficult to fix whatever issues may exist the longer you wait. So end of year is meant to mainly review, but if you're not staying up to things throughout the year, it can lead to a big mess and a lot of things that are hard to fix. So definitely stay on top of it month after month and strengthen that relationship between you and your bookkeeper if somebody else is managing your books. Okay, and then we'll go into a couple of tips here to help you with the year ahead. One of my biggest tips for accounting, which really applies to all parts of the business, is eliminate the duplicate data entry. And the way that tends to happen with accounting is you may have your billing record someplace, you may have your accounting record somewhere else, but the two of them interact actually quite heavily. They interact when you have client costs, when you receive invoice payments, even the trust account affects your billing as a retainer and affects your accounting as just a bank account that you need to manage and print checks and reconcile and all of the above. So if you have that information in different places, you're entering this information more than one time. Or even if you enter it once and your bookkeeper is entering it a second time, that's not only time consuming, but it can greatly affect your accuracy of these numbers. Because what tends to happen is you may have, if I show this image right here, you may have in the billing, which is on the left side, your invoice. And then on the accounting side is, when that payment comes in, it is reflected in your billing record and also your accounting record. But then when you reconcile in your accounting record, a mistake is found. So that mistake is fixed, but it then needs to go back to the billing record because especially if you're talking about an invoice balance or a retainer balance, those have to be up to date in order to make sure things like accounts receivable or billing balances, what's owed by a client, to make sure that's accurate as well. So these two areas communicate quite a bit. You need to make sure that whatever that system is, whether it's a very strong checks and balances, eliminating the duplicate data entry by having them kind of in one place. Those are a couple ways of reducing the risk of inaccuracies with your financials. So the less times you write any piece of information, but especially numbers, the better. Second tip is always be mindful of IOLTA compliance. So this is with the trust account. Of course, I don't have to tell any of you how important remaining compliant with your trust account is, but there's a few things to keep in mind. First is because this is highly regulated and there is some compliance around it, you need to maintain clean and accurate books. You need to take care when managing these balances for your clients. Now, these next few points are the basics of trust accounting. It's nothing new, but you need to stay on top of it. There should be individual ledgers for each and every one of your matters. You should know at any given point in time what those matters have in the trust account. Commingling is an example of there may be, $100,000 in the trust account. I don't know whose is what. Or I might be using money from one client to fund something for another client. Those are all forms of commingling. Or I have my own personal or business funds in the trust account mixing with everything else. That's another form. And very often it's not intentional, it's just poor management. When you're not staying on top of your ledgers, it tends to get very difficult to differentiate whose is what, and that results in that commingling. Should not be overdrafting on ledgers. In those reports that you should be seeking from your bookkeeper or accountant every month, you should see if there's any negative ledgers. That is a no-no with trust accounting. You should not have any negative ledgers. But if you're not properly tracking the balances and the transactions per matter, it's very easy to do so. Also those reports. So three-way reconciliation is a trust-specific reconciliation report, but also the trust ledger balances you should look at every month to make sure there's no negatives, even individual client ledgers to see what took place this month for this client so I can understand better as to how I got to that balance. You also want to account for your trust funds from the business side of things. So a trust account, or the money in the trust account, is a liability to the firm. That is a balance sheet item. So until it's earned or dispersed to other parties, it needs to be held as a liability. If I have a retainer that, let's say, is due to be earned, let's say I have $1,000, and then I earn it, I apply it to an invoice, that should then move from liability to earned income. So you just want to make sure that that money is shifting around the way that it should, and it's being recorded properly as a liability in the first place. And overall, as a firm, I always give the advice to function as if you'll be audited tomorrow. That's why this end of year checklist is mainly just to, double check your work. It should not be an attempt to catch up. You want to keep up to date, especially on the trust account, each and every month as a minimum. And that way, if there are issues or if there's reports that you can't generate, you know right away, and you can address that before you were to get audited, if that does happen. The third is always aim for a full client cost recovery. I think with client costs, that is an easy way to pay money out of pocket. And if you don't have a good workflow, you won't get reimbursed for that money. And that's a direct hit to your bottom line. So you want to have good processes in place to ensure that when you do pay for a cost out of pocket, that you do get reimbursed. And some of the things that we recommend is to reduce the dropping of those costs as much as possible. I think one of the best ways of doing that is to have either mobile access to your billing tool so you can enter those costs right away, or using some sort of import from the bank. There are bank feeds, there are statement imports, so that you can make sure all those costs are accounted for, but it needs to effectively communicate with your billing software. You can record costs on your business account all day long, but if you're not billing them to the clients, you're not going to be reimbursed for those. And also ensuring that they're actually being recorded as client costs on your general ledger. They're not firm costs, it's not overhead, it's actual client costs that need to be reimbursed. So they could be recorded as a reimbursable client cost, which is an expense account, or an advanced client cost, which is an asset account. As to which account you choose, that is up to you and your accountant, because it can depend on the type of work that you do or the type of billing that you do, but you want to ensure that your tools support that. And lastly, our last point is using legal specific tools specifically for billing and accounting. I think that's where a lot of the legal specific need is and requirement are. So a couple examples of legal specific needs is having the chart of accounts that you need, like the trust liability account, the client cost accounts, even the fee income accounts. You need matter-centric records so that all of those costs, those invoice payments, those trust transactions can be found easily under that matter and referenced the right way. Safeguards to prevent those trust mistakes like overdrafts or the commingling, and also give you the reports that you need. All those reports that are required, whether it's come tax time or for a trust audit, you want to make sure that your accounting tools can produce those. And things like fee distribution, that is being able to track who brought in what income and be able to reward percentages based on that income. It's not a requirement, but it's something that a lot of law firms do. And if that's something you're interested in or do currently, again, you want to make sure that your tools that you utilize, especially the accounting and billing tools, can support that. Okay, that wraps up our topic today. As I mentioned, we do have a full year-end accounting checklist in the handouts portion of the GoToWebinar panel. You can download that right now in the handout section. We do also have that available online at CosmoLex.com/year-end checklist. And I'd like to thank everyone for joining today's webinar. For those of you who are not familiar with CosmoLex, we are an all-in-one legal practice management tool that includes your practice management, your billing, but also all of these accounting tasks that we're talking about and functions. So if you'd like to learn more, feel free to reach out. But at this time, I think we'll go ahead and take any questions that came in.
Great. Thank you for answering all those questions. That's all the time that we have for today. I'd like to thank our sponsor, CosmoLex, and all of you for attending our webinar today as part of the LTRC Industry Insight Series. I'd also like to thank Deborah and Erica for presenting today. We will now conclude the webinar.
Thanks, everyone.
Thank you.
Bye.
Bye.